presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one.
Day.
Appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. I can't believe it. It's already the 23rd of April. Check that out, man. Wow. Don't take anything personally. Ignore the opinions of others. Whatever people do, feel, think, or say, don't take it personally. Others are going to have their own opinion according to their belief system, so whatever they think about you is not about you, but it's about them. That last line, man, always is like, I've been reading these cards for so long, folks, okay, but I still have a tough one with this last one. Is what it is. Market-wise, let's take a look at it out here. We have the Dow Industrials up 244, Nasdaq up 245, S&P's up 56. Gold contract up down $8.80, trading at $2,337 an ounce. We have silver up 12 cents, $27.45 an ounce. Light sweet crude up $1.50, $83.35 a barrel. Copper's down 5 pennies at $4.45 a pound. Notes and bonds. 10-year note up 6 ticks, trading 108.01. A 30-year up 5 ticks at 114.22. And King Dollar trading down 391 ticks at 105.686. Euro 107. Yen 154, British pound 124 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, bottom line is that we start off with the SPY. What you're going to see out here is that we came back, we filled the gap. Bottom line, you did it with lighter volume. We take off topside again. You know, we're coming into earnings. Bottom line, we're up $5.50 right now in the SPY at 505, and the first time that I see any resistance at all is up at 512. So you get another 7 points higher. NDX 100, we take a look at the 3 Qs, same type of setup in the 3 Qs. Now, the difference in the 3 Qs is that the 3 Qs came all the way back to its breakout area, which is really positive, by the way. With lighter volume, rejected lower price, takes off again, topside again. You get we got 32 million shares traded. You're at up 661, 425. The first time this is going to get any flack is up at 435. So you now got another 10 points higher. Gold. We could take a look at the gold contract. What we had with gold out here this morning, they got gold down to the 2403 number. Maybe it's 2304. We did 256,000 contracts. So what we have is this, is that you have a contraction of volume. You got the rejection of lower price, and that just says higher we go once again. And then if we take a look at this is where this is going to get interesting, because if you take a look at this, let's see what we did here. Yeah, we did a 50% retracement of the last move up. Okay, not bad. You know, we had to do something, man. That's the bottom line. The way this was just running away, you know, and you can see in 2 days, I mean, you talk about they can take the gold market part so much. It's just amazing, actually. But bottom line, guess what? It's back on, and it's back topside. We go into the note and bond market. We take a look at the note and bond market, and what you had out here, my take is that you had the 10-year bottom last week. We rejected lower price again out here today. You got to 107.20. We are 108.01. You know, bottom line, what I'm expecting now is that you're going to get more buyers in this market, and we're going to have higher price, lower yield once again. And then if we go over to the good old dollar, we take a look at the dollar. The dollar, and this is what's giving the market breathing room out here today, folks, okay? You're down 387 ticks. The dollar's had a hard time getting any type of traction going. We didn't make the 107, so it's going to get interesting now, because if we could get a couple days like this will get back inside this lower range. So the lower range inside the dollar starts at 104,970. So you're about 800 away from the lower range. But today, guess what? You get action. Let's go to Tesla. So Tesla's coming out with numbers after the close. They come out, they have a conference call at 5:30. The low for the year is 138. The high is 299. They are going to be looking to take to the top line $22.3 billion and 52 cents to the bottom line. Bottom line, 101's coming at us, and we're at 144. So this is going to be so intriguing. It's going to be really wild watching this thing shake out, man, because this has been quite a downdraft for Tesla. You know, the first leg from the highs, you went from 414, you went down to 206, you bounced to 334, and then come down to 101. From the 101, you bounced all the way up to 300, and my take is we're going back to 101. And if that's where we go, you are going to see a lot of hurting, because my take is that 101 is a high volume high. But if we get to 101, then my take is that you could get to $64, which would be just a total mind blower. But $64, I've seen it, man. I've seen it. And where I'm going with this, that's the last time you had volume on the way up for Tesla. Isn't that amazing? Every single leg up, you kept losing volume all the way to the top. And just to give you an idea, at the top, on a monthly, you had 1.9 million shares traded. The top before that was 2.1 million shares traded. The top before that was 4.6, and the top before that was 7. So watch. There's 7 million shares traded on the monthly at $64. Next high, there was 4.6 million at $96. Next high was 2.1 at $300. And then the next high was 1.9 at 414. Bye-bye. See ya. Don't want to be ya. And that is going to throw some chaos into good old Elon Musk. Yeah. There's no two ways about that. We take a look at some of the higher volume equities out here today. We have, let's see, what do we got out here? NVIDIA's up $29. You have JetBlue's down $1.50. We have Cleveland Cliffs is off a couple bucks. If we go inside the Dow Industrials and take a look at the strength versus the weakness out here, oh, look at that. Interesting. Okay, so you got Microsoft putting 41 positive points, Goldman 40, Caterpillar 40, taken away from it, United Health minus 37, Boeing minus 11. Stay right there, folks. Coming right back with our man, Mr. Basil Chapman.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 241, Nasdaq's up 254, S&Ps are up 57. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil does an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, the opening call. Now, it's very easy to get the opening call, folks. Come over to our website at TFNN. You're going to go right under newsletters. You're going to see it on the left-hand side. You can get the opening call for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 or 22%, and you can get it for 1 full year for $1195, which is a savings of $593 or 33%. They all come with a 30-day money-back guarantee. Basil has approximately 12 to 13 archives, so you'll really understand how he looks at the market, how you ride the wave each and every day. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
I'm very well, thank you.
Good, good. So spring is sprung, that's for sure.
That's for sure. Yes, it's the door is open to spring. I welcome it. I love spring and I love summer. Yeah.
I love it. That's right. With all your tennis. And when I was listening, it was so cool when I was listening to you and Steve, and then you were a sprinter and you didn't meet Bannister, but that's pretty cool, that whole deal, man. And you look like a sprinter. You still look like a sprinter.
Well, the body doesn't want to admit it, but yeah.
I love it. So let's talk markets. What do we got here?
So what we're looking at here is, so I've been negative on the Dow. We made that double top. The top was on the 21st of March. And what I said was I'm anticipating some kind of a rotational thing, and I'd use the 9-period moving average and 14-period moving averages to say when they cross negative, that's usually, for me, I call it the indicator of last resort. When they finally turn down, that usually gives you quite a bit of a pullback. So that's what we got right here in the Dow. So we had we have core long positions, but we have a short-term trading position, a 1-to-1 short that we've had for quite a while, taken some profits off it. But at the same time, yesterday morning, because I looked at the patterns, let me just open this up a little bit. I think it'll be a little easier to see. This kind of arch formation where the price gets taken out. This is a daily chart. And then it comes down, and I'm watching the MACD start to expand, but the histogram, those little vertical lines, is called the 0% line. When it's above 0, that's positive. That's just telling you that the 9-period moving average is over the 14-period moving average. This is a 9-period differential, it's actually called. And that to me says once it starts to move up, you've got to be careful because, yes, the price could deflect lower, but it's also telling you that there's been a change, an internal change that could be a change of trend, but at least the gravity of the downside has stopped going down. So I like that. I like the fact that the volatility index, now I hardly ever use the VIX index for the Chapman wave notation. It's the only one that I don't. But it's surprising how many times lately the peak Ds and Es have given you sharp pullbacks in the VIX index. Look here, 17.94 on the 14th of February. And look, that sharp pullback, that's where the market started rallying. And we had this on today's Tuesday, on Friday. It went to 21.36. And the more work I did over the weekend, the more I thought, if there's even a hint of some kind of peace even if it's just very temporary in the Middle East, you could see gold pull back, you could see oil pull back, and if the VIX pulls back, they could help the market. And that's all I was looking for because I needed that to confirm that there could be a rally. So yesterday morning, we went back to add to the long position in the Dow, a little bit aggressive, but we've got that. And tomorrow I'll probably take off the short position. I just wanted to keep it there as a little bit of insurance. It's only 1-to-1. The aggressive alongside, we've got a small position 3 times long. So it's like a 2-to-1 advantage for the long side. So let me go back to the Dow to explain what I'm looking at. I'm still concerned that the weekly chart has pulled back very sharply. But if you look at that now, you remember I talk about the 9-period moving average being green. If it's over the 14, that's positive, and it goes pink when it's negative. Look, it's still quite that 9-period moving average in the weekly chart, the middle chart here, is still very strong. It's turning down, but it hasn't crossed a negative. So I'm anticipating that we've got some kind of a bounce here. How the bounce lasts maybe through this Friday at 4 o'clock, is going to be determined a lot for the weekly chart. But so far, the long positions work quite nicely here in the Dow. And I'm also looking at this whole rotation because we had a very sharp, we've had Bank of America for some time. It ran up to 38.35, we're taking a little bit off. But look at this, it pulled back to 34.15. And you saw the same thing with this MACD being weak, but look at that big turnaround in the histogram, those little vertical lines. And look, here it is at 38.26. So I'm anticipating that this continues to be a rotational market. The stocks, like we still have Microsoft, is still kind of digesting sideways. But I'm looking at this and saying there are some areas that I think are actually, look, all of a sudden you've got the XLF, which is the financials. Here's Bank of America doing very nicely, a recovery high, yearly high at this particular point at 38.27. And here's Bank of America, XLF, Selects Financial Spider Fund. Look at the monthly chart way over here. Look at that beautiful cup formation. It went to a higher high than the high in January of 2022. Something I'll talk about in my show. I've done this so often. I can't believe after 2 years, more than 2 years, a price can go from 41.70 down to 29 and then comes back within pennies of that previous high to 42.22. We've seen that in so many markets. So it's quite fascinating how prices come back and then bump into that resistance. But if you look at the KRE, we've tried this before, didn't work out. But now I think the action in the regionals is a lot better in this move. If the KRE trading at 48.82 is able to get into the 49.50 area in this particular run, I think that'll be the first time that you're actually seeing that the yields that have moved quite a bit higher are actually improving the outlook now for some of the banks. And it's really important to have the regional banking index not crater, but to start moving higher. I mean, that's Mr. and Mrs. America, right?
Well, what that's also saying is that it's saying that these rates will come down, because if the rates don't come down, they're going to get smoked. Yeah.
Yes,
because of the commercial real estate. So, yeah.
Right. So, but I think just looking at the market generally, it's really important that you finally get something in the regional banking area.
Oh, yeah.
So, and that's one thing that I think is quite important. So I had spoken to you about this DBA, which we've had for a long time. This is the DBA Agricultural Fund. So it made an all-time high yesterday. I think it's ready for a bit of a pullback. But what's fascinating, it has CC, which is the cocoa, which has gone. I mean, look at this monthly chart. That is unbelievable. Look at that move up. This is still a single leg from September of 22. 2022. We've not had a peak yet. This is still that same leg to the upside. It's an incredible move from the 2,000 level to, what was the high, 11,700. So I think it's ready for a bit of a breather. Now, if that happens, and if the commodities can start to come down even for a little bit, I think it gives some relief to the general market. So it's kind of complex right now. I like the Dow. I like some areas that are starting to improve again. Some of the stocks we've got, I'm going to add back to some of the positions we've taken off. So I think I'm looking forward to the next few weeks.
Folks, come on over to our website at TFNN. You're going to go to newsletters, right-hand side. You're going to see the opening call. Hit that button. You're off to the races. Basil, have a great one, safe one. We look forward to the show tomorrow.
Thank you, Tom.
Stay right there, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26th, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26th, Tigers. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow Industrials right now up 237. You get the Nasdaq up 254. S&Ps are up 57. Let's get over to our man, Mr. Tim Ord, as we do every Tuesday and Thursday. And don't forget, folks, you can get hold of Tim every trading day at Ord, O-R-D, -Oracle. ord.com. That's ord-oracle.com. Tim Ord, what's going on?
Well, I think we turned the corner to the upside. So let's look at we'll look at the S&Ps first.
Cool, man.
All right. Yeah, let's go to that chart 1, which is that Zwag breath thrust indicator.
Oh, yeah, man. I'm digging this. Okay, now pay attention here, folks, okay? Go ahead.
All right. ZBT is just because this is Zwag breath. Say that fast 3 times. You can't do it.
ZBT's where it's at, man. I like it, Tim. I like it.
All right. Well, anyhow, on April 18th, this indicator turned up from below 40. And this indicator is actually, I better describe it what it is, but it's the bottom window. And what it is a NYSE advancing issues divided by NY total issues, and you take that times 10-day average. And so it's a ratio type thing.
Yes.
So it kind of measures the up volume against the total volume for what it does on a 10-day average. And again, we hit below, it turned up last Thursday below 40. And so it needs to reach it turned up below 0.4 last Thursday and needs to get to 0.6 in 10 trading days. Well, 10 trading days is next Wednesday, May 1st. So we got all this week, which is basically 3 days, and actually 3 days next week. So we're still, but when I made this chart a couple hours ago, it's 0.56, and it needs to only get to 0.60, so we're going actually pretty fast. But we need, in general, for the market to hold up. If it went back down and tested the recent low here we had last Friday, then this indicator may not get there. But if we hold or, trade sideways for a couple of days and keep rallying, most likely we'll get there. And I think, we probably will. And if we do, these ZBTs don't happen in downtrends. They happen in uptrends. And a lot of times, I got the red line on the chart. This chart goes back, actually looks about 3 years or better, are times when the ZBT hit minus below 40, and the blue lines are when it hit 0.6. And so that consolidation we had in 2022 and part of 2023, you had 3 ZBTs in that time frame. So that was a bullish sign that the market was not making a consolidation for more down. It was making a bottom for an up. Then last October, we had another trigger signaling the bottom, and the market really took off. So we may get something similar again in the next couple of 3 days. Today is actually a good day. If we can have another couple of good days over, say, if we can have 2 more good days in the next 5-6 days, we'll probably get it.
Yeah, no, I saw
anyhow.
because last night, it had already got to 50, right? So it's at 56 now, right? I mean, because I was looking at your newsletter. And, folks, you want to pay attention to this because Tim turned us on to this. I remember the one in October, Tim, remember we were watching and it went, right?
Yeah, it went.
Yeah, right,
Yep.
right. Yeah, so.
Yeah, because the lines, the software I use, kind of these lines move around. But in general, October of last year, you nailed that bottom. Really pretty good. So we may get another one. May get it's kind of a sign of strength thing, which is always nice. So let's flip to chart 2.
Okay.
We're kind of skip around here a little bit.
Yeah,
this is a monthly SPX. Second window down from the top. The only thing I want to point out on this is when 50% of the trading range closes above the monthly upper Bollinger Band, a lot of times you'll get a consolidation in the next month. And I circled all of them going back to 2017. So it's fairly rare, but when you get them, the market's just going up too fast and needs to consolidate.
Yes.
So now we're getting the consolidation. And so, but if you go to the second window up from the bottom,
okay,
you got the SPX VIX ratio. This is on a monthly time frame, not a weekly time frame.
Yes.
And the only thing I want to point out here, the kind of the pink areas are times when the S&Ps are making higher highs, and this ratio is making lower highs. A lot of times they come at intermediate term highs. And if you notice in the blue area right here, this ratio made higher highs as the S&Ps made higher highs, even though we did pull back, April so far.
Right.
On a monthly time frame, there's really not a divergence here. So
that's kind of amazing, actually, right?
There's what?
That's kind of amazing, actually, when you think about it.
Yeah, it's so the monthly time frames are still bullish here, so they're not. So we're just kind of having a time out and an uptrend. Is how I'm kind of looking at it.
Yes.
So let's go to chart 3.
Okay.
And this is a weekly SPX. And I wanted to point out the second window up from the bottom is the SPX VIX ratio again. And I just pointed out that going back to that late 2021 high, early 2022, that ratio made lower highs as the SPs made higher highs. And looks like about August of that same year, the market was going up, and that ratio was going down. But anyhow, the bottom window or the second window up, if you get acceleration in anything, it's usually a bad sign. So it's kind of like a parabolic move, and you can apply it to indicators too. So if you get something going too fast, and I use the Bollinger Band, it seems to work really well. If you get above or below the Bollinger Band on a daily, weekly, or even a monthly, depends what time frame you're looking at, a lot of times you get a consolidation as far as up goes, or if you're going down, you'll get some sort of a bottoming pattern.
Yes.
And what I want to point out here on the VIX, I pointed out the times when the VIX got above its upper Bollinger Band, and this is on a weekly time frame.
Okay.
And I circled them all going back. If you notice, they all came at lows. Last time we had the Bollinger Band below or the VIX above its upper Bollinger Band, or the SPX below its lower Bollinger Band, it came right at the October low of last year. Well, the same thing happened just over the last week. The Bollinger Band, look at the bottom window there, is above its upper Bollinger Band.
No, I can see it. It blew right by it. Right. Wow.
Yeah, so it went down too quick. I mean, the decline kind of actually, you nailed it. You said we were going to that gap, and I started getting bullish. I hear the music.
Just stay right there, folks. Tim and I are going to be coming right back. We have the Dow Industrials up 265, NASDAQ up 256, S&Ps are up 60. Tim and I come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Tim Ord, Tom O'Brien. We do appreciate your growling and prowling with us. And don't forget, folks, Tim's got a great newsletter. You can get hold of him every trading day at ord-oracle.com. Tim, you know what's amazing, man, and you've been showing us this, like on this downdraft right here. This downdraft was so fast. I mean, we don't know whether it's over, but it's so intriguing that you didn't come down that much. You went to the gap, and then all of a sudden it's like, okay, I did enough. Now I want to go up again. It's like, really?
Yeah, pretty much. Matter of fact, I seen this kind of a type. Actually, I got a. You nailed it. So I'm assuming. You were getting long in that gap area, but anyhow,
I did. Yes, I did.
Back in 2019, going into December 24th low, I got a buy signal on the ticks and trend, that ratio we talked about before, where the trend has to close above 1.2 and the ticks has to close minus 300. Anyhow, I got that combination on. I don't know. Anyhow, the exact same thing happened. The market went down. This indicator on number 3 chart, the same indicator gave me the same buy signal as the one back in that 2019. I thought that was real interesting. The market kind of repeats itself. Is why I'm making my point here.
Yes.
But anyhow, let's go on because I can get off tangent here. When
okay, I'm ready. Go ahead.
So,
yep.
Yeah. All right, let's go to the next chart here.
Okay.
Okay, this is kind of, we talked about this before. This is a monthly chart on the SPX.
Yes.
If you notice, we were only traced 50% of the move up from the COVID crash of 2020. 2020, March 20, we traced 50. The whole thing's a head and shoulders bottom, which has a projection up around 5,700. Which is about, a good 10% higher than where we are right now, give or take. And I want to point out on the bottom again, you got a divergence back at the 2022 high and back at the 2020 high. The market was going up, making higher highs. That ratio was making lower highs. And again, this time around, the ratio was making higher highs along with the S&Ps. So it didn't determine that the market was going to make an intermediate term high. So I'm thinking this is just a timeout and an uptrend. And I think that 5,700, if not better, is still what we'll see before the year's out. So I think intermediate term, I think the market looks fine. I don't think there's anything really to worry about. And I think this decline's probably not going to let you in, or not decline, but the current advance, I don't think they're going to let you in, because I don't think there's going to be a big pullback of any consequence here. I think the ZBT is just going to kick in here in the next couple of days, and things are going to keep on going.
Yeah, well, what's amazing is that, folks, and if you look at the Qs, what happened with the Qs, folks, okay, and the Qs are leading the market. The NDX is leading the market. The Qs, man, came right back to where the last time we broke topside from, like the week of January 19th. And it came back with lighter volume. And it's like, okay, man, that's it. Is that really all you want to do? So it was pretty cool in the context of how this thing shook out. Do you know what I'm saying? So it's like, okay, man, if this is going to be it, this is going to be it. So
Plus, politics has a little bit to do with it too. This is the year of election.
Yes.
And so they're not going to kill the market.
Right.
It's at best it may go or at worst it may go sideways, but you're not going to see a big decline here of any consequence. So let's talk about the gold market a little bit.
Oh yeah, man, they tried to kill that yesterday. Okay, let's go. Let's take a look at it. Okay.
This is pretty good. Chart 5.
I have it.
And I got this doesn't really pick out the bottoms and tops per se, but it catches the trend. So I designed it to the trend. All that blue area.
Yes.
The bottom window is the 50-day average of the up-down volume for GDX. That indicator seems to work well. The next one above it is the advanced decline for GDX, but it doesn't even work as well. So I stick with the up-down volume. And what's happening right now, I got squares. GDX, which is the top chart there.
I see that,
got a square around where we currently are.
Right.
And we're at a breakout line across that. That breakout line goes back to 2020. So it's a big line, and we're attacking, or we're at it right now, right smack at it. Well, if you go down to the bottom GDX, that 50-day average. Now, it's 50-day average, so that's what 2.5 months of trading per se.
Yes.
So 2.5. Yeah, about 2.5 months of trading. I used other I used 62 days, and 50 days seems to work the best. But if you notice, we had a spike here over the last couple of days in that indicator. You see that big spike up?
Yes.
That bottom indicator. Well, that's strength. So when that indicator is going up, it's showing that actually, even though the market hadn't done anything yet, it's going sideways here.
Okay.
You had a big bulge in that indicator, so it's gaining strength right smack at where it should be if you're going to see a sign of strength through that, call it a neckline, or through that red dotted trend line. So I'm thinking we're not going to back away from that trend line, but we're actually going to bust through it because of that indicator is actually gaining strength. It's not weakening here. It's actually gaining strength. So I'm thinking we're going to pop through. I'm thinking this, you can't really tell it on this chart, but to me, it's a 5-wave up from the March low. You can probably, if you look at GDX, we're screwing around with a wave 4 right now.
Yes.
I'm thinking that's what's going on. Then we got wave 5 coming because we got a surge in the up-down volume indicator, surging up, up to a new recent high. So I think you're going to gain strength there, even though GDX is not doing a whole lot today. It's kind of really hadn't done nothing over the last, couple of weeks or so. Kind of flipped sideways. So I'm thinking this is a wave 4, and then you'll have a wave 5 through that neckline. Then maybe we'll get some sort of consolidation.
And what is amazing, Tim,
I think we're going to get. Go ahead.
No, what is amazing also is that, we had gold. Gold was down $70 yesterday. Well, pre-market today, folks, gold was down a good $45. And
wow.
With that context, though, Tim, what happened is this. I'm up and I'm looking, I'm saying to myself, all the gold stocks are going to be killed again pre-market, right? They weren't. So gold was down at that 2403 this morning, right? And I'm pulling up South Africa first because South Africa is trading, folks, okay? South Africa, Harmony was doing fine. GFI was okay. I'm saying to myself, okay, this is really strange. So that is basically certifying exactly what you're saying, because it's a mind blower that they weren't down, and then as soon as the market opened, gold was still down $20, but the equities themselves, were flat. And I says, oh, this is really interesting, and particularly for the gold market. We know. It's they love to take that apart, and so someone was in there buying, man. That's even before we opened. So pretty cool. Yeah, stay right there, folks. Tim and I are coming right back. We have the Dow up 259, Nasdaq's up 246, S&Ps are up 60. Tim and I are coming right back, folks.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Tim Wood, Tom O'Brien. We do appreciate you growling a problem with us out here. Okay, Tim, I'm ready.
All right, so, Chart 5 says because of the bottom window there, the up-down volume getting strength, there's probably some short-term strength going to come into GDX. So let's see where the momentum's going to, how the momentum charts are doing.
Okay.
So page 6.
Yes.
This is a weekly GDX up-down volume. That's the bottom window, and the next one, higher window, is GDX advanced decline. So that's the whole market. This up-down volume, advanced decline, all combined into a easy to look at chart.
Yes.
And this doesn't try to catch the bottom or top, but does catch the main trend. And this is a weekly, not the monthly. We'll look at the monthly next chart.
Okay.
But right now, we're actually above both mid-Bollinger Bands, and that's when the signal is generated. It's not a perfect chart because you go back to 2023, it did get above the mid-Bollinger Band, but came back down. But we're back above the mid-Bollinger Band on both indicators right now. Not a lot. You can't really see it by the chart, but if you do the numbers, you're up a little bit.
I can see it slightly.
So if the GDX just holds here or goes higher, then most likely this indicator will remain on the buy signal. So the weeklies right now are on a buy signal. So chart number 7 is the monthly. And so this is a monthly time frame. And you can see the monthlies have not closed above the mid-Bollinger Band yet.
Right.
So will it, for that to happen, GDX needs to remain at least stable here for another month, maybe 2, because, again, this this momentum charts are not designed to catch the bottom or top, but it is meant to catch the 80% of the rise. It won't catch the top, it won't catch the bottom, but it'll catch the mid-range. So I'm thinking we're going to close, sometime in the next couple of months, close above that mid-Bollinger Band. If we do, then you're looking for most likely a multi-year rally.
Real action.
So,
that's right. I like it.
Yep.
Tim, it's always a pleasure. Right. You have a great one, safe one. Of course, we look forward to speaking to you on Thursday.
All right. Have a good one.
Take care, man. Tesla's coming out with numbers after the close, folks. Come back and visit us tomorrow morning, 9 o'clock. Have a great one. Have a safe one, folks.